So my name is Steve Chappell. I'm the Director of Trading Systems Development here at VectorVest. I've been with VectorVest now, I'm going on 19 years. It's been quite a ride. You know, I've seen all kinds of markets. Never one quite like this, I don't think, but at the same time, I've said that on prior occasions. So there's always something new to try to work through as far as the market is concerned. That's just the way the market is, right? But having said that, you know, here at VectorVest, I've taught or teach everything that we have to offer. And it's just been a lot of fun, and that's why I'm still here, you know, ultimately. So I'm going to go in wildly different directions today with my picks, guys, just so that you know. And we did say that this was a low-priced explosive endeavor today, and I violated that rule big time on one of my picks. But I did so because I just think that it makes a tremendous amount of sense from multiple perspectives. First stock we're going to talk about is called Clorox. And Jim's going to love this stock, I think.
It's a great one.
He's retirement services, you know, and I'm typically the trader guy, so this is kind of fun. It's kind of funny for me and probably fun for him too. But with Clorox, I like it for a variety of reasons. One, to me, I've lived through many market bottoms, 34 now, I think, in total since I've been here at VectorVest, or pretty close. And one of the things that's interesting about this rally over the past 3 days that I've never really observed before is that the market has yet to go risk on. And what I mean by that is the small caps are not really moving. I lead a trading room every morning called the Jockey Club, and we monitor and have been looking to bottom fish, and actually did bottom fish this morning. But we didn't go the traditional way, and where we'd go very, very risk on with the really low cap, low price stocks. We observed that they just weren't kicking into gear. So it seems like most folks are still scared, you know, and the retail guy, if he's starting to get back in there and nibble right now, is doing so on the big names, the Apples, the Microsofts, the Visas, the Amazons of the world. So the search that we ended up choosing looks for some of the stocks in the S&P 500 that got hit the most. So, you know, that made some logical sense to us. But all of that to say, one of the reasons that I picked Clorox today was simply it's a great overall caliber stock. Not so much from a capital appreciation standpoint, although I think you're going to get that too, for another reason I'm going to mention here in a second, but more for the quality of the dividend and the consistency at which that dividend is paid on an annual basis. There's hardly a worse place, or better place in this case actually, to park your money than in something like Clorox right now. It's known as a dividend aristocrat, which is, Jim, correct me if my math is incorrect, but that means that Clorox has grown their dividend 25 straight years.
Or more, yes.
Or more.
That's right. Yep.
And I think in this case, more like 50
I'm
probably.
sure it's much more than 25. Yeah.
So, you know, you're going to get dividends here. You'd have opportunities to do things with options in terms of generating a little bit of extra income if that's something that your heart desires. But also, if we think about the term in terms of the coronavirus outbreak, I think that you're going to see Clorox, particularly if we hit epidemic status, which seems like it's just a matter of time, but may not be. Well, who knows? But here's the beautiful thing. Whether we reach that or don't, I love Clorox. Whether the outbreak becomes worse than it is now or whether it doesn't, I think it's a great overall stock to own for all the reasons mentioned. And so I don't even really need to look at a graph on that one, but if you'd like to, let's pull it up. And give me like, I don't know, Glenn, give me 10 years. What am I doing here? So there's Clorox. You know, it's got some volatility to be sure, but again, this is a staple in your portfolio. This is something that you just know that in the future, you know, people are still going to want their Clorox, and always have, and always will, and maybe now more than ever. So that's why I picked this one, and I think that you can buy it right now.
Yeah, but go to 3 months, Glenn, because this is to Jim's point, right? Here's a stock that has a single-digit growth rate. It should be, you know, a steady eddy, right? But look at the price appreciation over the past 3 months, right? We're ramping up. Look at the volatility over the last 4 sessions. Holy cow. So there's certainly some trading opportunities going on here in what otherwise would be...
Sell the put to get in.
Oh boy.
Oh boy. I'm just going to say,
Sell the put to get in. No, really, collect the premium, get paid a little bit more, reduce the cost basis. Or maybe not even ever have to own it.
The great thing about Clorox is this: it's one of what I would call, for the search, called blue chip dividend payers. You saw relative safety is not up around 1.4 like we usually have. However, it is a dividend aristocrat. It's got a strong free cash flow, a mature, well-known company. This is the kind of stock you want for both capital appreciation and dividend. And Steve is right. I'm not going to look at intraday movements
Right.
if I'm deciding to buy Clorox or not.
No.
So this could be bought at any time.
Or intra-week movement.
You know something? I was getting ready to say that. Why not go to weekly 10 years? That's, now.
Whatever you like.
I mean, all the way around, this is something that you would want to hold on to for the long term.
Over 10 years, it was a sell-rated stock for about 3 days.
And you gotta hone in on that.
Yeah, you can
This
barely
stock
see
has
it, yeah.
been a buy or hold for last 10 years. Somebody find me another stock like that. They're out there, but we're bringing it to the panel today. I like the stock, and it goes on. Jay says it also makes non-dairy creamer. No, they don't. I don't think they do.
I wouldn't drink it if
I
they
wouldn't
did.
drink it either. Wow. I don't know if Jay's coming out of left field there or not, but holy smokes. All right.
Oh, Jay, he probably is. Attaboy, Jay.
You ready, Steve? for your
Yeah,
next
let's
one?
move on. Let's step onto the wild side.
All right, there we go.
Yeah, let's kick things up a notch. Somebody earlier was calling for Biotech, so here you go. This is going to be an interesting pick. There are several. There's about 5 stocks right now that, based on the coronavirus, are trying to come to market with some kind of therapeutic, either blocker or vaccine for treatment after you've already contracted the virus. Inovio is trying to be the blocker. They're trying to give you a way to become more immune to even contracting the virus to begin with. It's very interesting. Their drug apparently has shown very, very good signs early. I think they're moving quickly to a phase 2 clinical trial, which is going to be done in April. And it's starting to catch fire here over the past couple of sessions. So first things first, what I want Glenn to do is right-click on the stock, go to View Stock News. This links us out to Yahoo. When we get there, what he's going to do is just scroll down. I'm going to have him click on that article with the big C. So when you're looking for this at home, because I think you probably do want to spend some time to peruse through this article, learn a little bit more. Biotechs are all about what's in the pipeline. Mm-hmm. This particular biotech is not purely after just the coronavirus implications that I went through, but also they've got a few cancer drugs in the pipeline that are in late stages, both 2 and 3. So it's a very interesting candidate from multiple perspectives. Cancer is a huge buzzword in the biotech industry in terms of option trading. I can just tell you, those are the kinds of things that I look for when I'm looking at FDA approvals. These littler companies, not your GlaxoSmithKlines or your, what's some of the big ones there, Jim? But or Johnson & Johnson, or anything, Merck, Pfizer, any of those kinds of companies. You're looking for more of a stock that's make or break. I do like the idea of options here as a potential to mitigate exposure and not be as in tune with the intraday volatility that you're likely to see here. Maybe just minimizing that exposure enough to not worry about it so much, But as you go down through this article, that's where it's going to get into how they're really they're the leader right now in this progression. And so if we close that out, again, there's like a C. When you go down to the Yahoo News feed, there's like a C next to that article that I had Glenn click on. There's some great info in there. All right, so what we're going to do with biotechs, generally you don't want to necessarily read the RV and the RS and worry as much about that when we're talking about the things that we're talking about now. We're more focused on, I almost said focused.
Don't be saying that.
You're starting to rub off on me, Glenn.
Dude, this a family. Don't be
We're
saying
gonna have to talk after this is over.
Listen,
I'm gonna slide back.
I'm about to turn red, and that's hard for me to do. Holy smokes!
All right. So what I'm going to have Glenn do is get the chart up there. See if I can talk English.
Okay.
All right. So we're going to go to INO.
There it is. Okay.
And you can see here, take earnings off. We don't need that. It's irrelevant.
Okay.
All right, so we're basically going to key in on price action. We could throw volume in here as well, although you can tell with the couple of bars that we're dealing with past 2 sessions, volume is extraordinarily high. We're well over 100 million shares, I think, now traded on average, right?
That's
Over the past 2 sessions.
yeah.
And the reason is they have emerged as the leader, okay? Now that can change, phase 2, phase 3, there's lots of headwinds still, but they are being fast tracked. So there's a lot of clamor and a lot of action, based on that. So if there's one to watch, it's this one. I'm willing to buy this one on any day here in the future where we break through today's high or pull back to one of the Fibonacci levels that I've had Glenn so graciously include. I'd be looking at the 23 or the 61.8 line. If we're fortunate enough to get a 61.8, and what I'm waiting for when we come back to these levels, what I'm really looking for is resumption of uptrend. I'm looking for explosiveness. I'm not looking for 1 or 2% moves. I'm looking for 10. I'm looking for reignition. I'm not buying it today. I would not buy it today. You're likely to see regression to the mean. You're likely to see fall back to some of these Fibonacci sequence numbers. Why? Because that's who's in here right now. This is not your average retail investor. There might be a good number of them, but the traders, there might be now, but the traders are the ones that are controlling the price.
For sure.
Okay, the traders are controlling the price, not the retail guys. So, and they're in there in numbers, and so you want to let this thing settle down or reignite, or settle and reignite, whichever happens first. I would prefer we come back, and if we can get to the 61.8. Boy, if you like it now, you're really going to like it if it gets back to 61.8. And that's it for INO.
Yeah, I'm okay with any retracement less than that, right?
Sure.
That's fine, but I need to pivot so that I know where to.
Pivot.
And the reignition, that's the key.
Yeah.
I can't.
They tend to fall on these support and resistance lines. Did you guys know that Fibonacci's no more than support and resistance, really?
Yeah. Wow, I wonder where that was said earlier today. Because I'm getting
Support
ready,
resistance.
I'm getting ready to say,
You're
look
the
at where
bias.
it did a little pullback.
Sure.
Right at the 23. It's still holding.
Sure.
And you know something?
You know why? Because the traders are in there, man.
And they know.
They're in there.
They know what they're
This
looking at.
proves right now that the traders are in there.
I was going to say that weak support at $6 is probably about 50%, right?
Yep.
Does it trade options? It does trade options.
I believe it does.
Oh, I don't know.
I would look into that too, but listen, the story behind it is great. So, wherever you buy it. I mean, go down to the 61.8. You're talking about it.
I don't know what the price is.
It's like 8 and change. You're
Oh,
talking
no.
about the 4 and change or 4.5 or whatever.
It's about 464.
That's a big pullback, but
Four
again,
and
it is it's a great story behind it, and I think Steve explained it perfectly why and when you would buy it based on the story
The
behind
one
it.
thing I didn't say that I better say, because I meant to say, is I would not ever, never, ever buy
What?
the same amount of shares here or same capital outlay as I would in my retirement account. When I was talking about using options, and so I'm talking about reducing risk monetarily. So this is more of the fun money, yet potentially very profitable money side of things, where I would go a tenth the position size, or something like that than I typically would. Now I'll kick it back to you guys.
All right. Man.
All right, that's great. Boy, I tell you did hit both ends of the spectrum.
I did.
Holy smoke.
Clorox.
I did.
And remember,
I love
when
it.
it comes down to
I love
Clorox, don't drink the creamer.
And I'm going to put myself on timeout now. Having
That's
done
it.
that.
What is that, the caution cone?
Yeah, that's
Steve's got the caution cone.
cone of caution on Inovio.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.